If you're serious about building your financial future, don't just save in a bank. Your emergency goal, even if it's $500 or $300, this helps you sleep better at night. Answering this question for yourself helps you choose the right investment for yourself, and it also helps you align your investments with your goals. Hey guys, welcome back to my YouTube channel. My name is Bessie Munyori. If you're new here, welcome. If you're not new here, still welcome. This is a channel where we talk about everything money, everything to do with investing, saving, everything to do with money market funds, treasury bonds, stocks, Kenyan stocks, ETFs, international markets. I also talk about things to do with being an international student in Australia. So if those are things that you are interested in, kindly subscribe, comment, share, hit the notification button so you don't miss another episode. So, money market funds or treasury bonds, which one is better? If you've been trying to figure out where to invest your money in Kenya and still have good returns, this video is for you. We'll break down the difference between money market funds and treasury bonds, how each works, its pros and cons, and most importantly, which one might be better for your investment goals. So, money market funds, commonly known as MMFs, are investment vehicles that primarily invest in short term investments, for example, commercial papers and government securities and real estate. Money market funds like CIC and Sanlam pull money from different investors and then they invest it in these different asset classes, and when they get the returns they divide it amongst its investors. Some of them include CIC, Sanlam, Kuza, Etika, Britam. But guys, before you invest in something, just make sure you are doing your research, and also don't always hope on new money market funds. Like you had, there's a new money market fund and now you want to hope on it and you have not done your research. We don't want you crying because you got conned. The key things to know about money market funds is your capital is preserved. So once you invest your money, they kind of assure you capital preservation. A disclaimer, anyway, is that you're never assured of any capital preservation. Like investing is a risk. As long as you're giving someone money to invest for you, it's a risk. But these are regulated institutions as opposed to an individual telling you to give them money to invest for you. You putting your money in a money market fund or you not putting your money in a money market fund is risky anyway. So choose your struggle. So returns are usually earned daily and credited monthly, and also your next month's money will be calculated from last month's money plus interest. I hope you understand that, guys. They usually have a return of around 9 to 16% per year. So the good thing about it is that they provide hedge against inflation. Obviously, if you just put your money in a normal bank account, inflation is eating up your money. So money market funds are good because they provide a hedge against inflation. The other good thing about this is you can withdraw your money anytime. It only takes 2 to 3 business days. Like for me, when I want to withdraw from my CIC, I just email them and they send the money to my family bank. So within 3 days, I have my money. And that's why it's important for you to store your emergency fund in like a money market fund because it's very accessible. You're going to be able to withdraw it in case an emergency comes up and you'll be able to sort the emergency as opposed to trying to liquidate something like land to handle an emergency. So, guys, please keep your emergency funds in highly accessible savings accounts. They are also low risk, and that's why they're usually low return. Obviously, if you know there's a high risk, there's a high return. So, money market funds are low risk. So, that's why they have a low return. But the good thing, like I said, they protect you against inflation. They're also regulated by the Capital Markets Authority, CMA, which is usually the body that regulates all financial institutions in Kenya. The best part about money market funds is that you can open an account online no matter where you are, as long as you have your KRA PIN, your ID number, your passport photo, your bank account, and I think address. You're good to go, guys. Don't sleep on this. Money market funds are really good. And when you put a lot of money, actually, you see good returns. On the other hand, treasury bonds are government securities issued by the government. They pay fixed income at fixed periods of the year. So bonds usually pay their coupon rates or their interest payments twice a year, every 6 months. And they're also relatively cheap, they're low risk, and they can be a good entry to earning passive income. So basically, what happens is the Kenyan government asks for loans from its citizens and they promise to pay you back interest every 6 months. And after the period of your bond, let's say your bond was going for 2 years, 10 years, 25 years, after those years, you will get your initial capital. The key things you need to know about bonds is their minimum investment is 50,000 Kenyan shillings, around $500. And guys, for you to see good returns in bonds, you need at least maybe 100K and above, because sometimes the returns are not so good. And for you to feel the impact of investing in a bond, you might need a sizable initial capital. But this shouldn't stop you from investing. If you don't have enough money at that particular time, save your money in a money market fund. Then, when the time comes, you can buy your first bond. The best thing I love about bonds is that they pay you interest twice a year. So, if you bought a bond in August, you'll be paid interest in February and in August again. And if you are paid 45K, that will be the amount you'll be paid every 6 months for the next 7 years. And after those 7 years, you will get your initial capital. So, bonds, especially when layered properly, they can provide you a good passive income, which is like a dream come true. Bonds are low risk, and so sometimes they have low returns, but it always depends on the initial capital. And also, they are backed by the Kenyan government. I know most of us don't have faith in our governments, but so far, so good. We have still been receiving our coupon rates, and I hope we continue like that. So, they're regulated also by the CMA. And yeah, I just pray and hope that they continue behaving well. If you need to exit early, or if you need to sell your bond, or maybe something happened and you really need to liquidate or to cash out, you can sell your bond in the secondary market. But this comes with a risk of price fluctuation. Like, you might not get the initial amount you invested just because you didn't wait till the period of the bond to end, liquidating it faster than you had signed up for. So, which one should you choose? Most of us have different investment goals. Some of us is to retire early, some of us is to have an emergency fund, some of us is to have a vacation fund, to travel, to be a stay-at-home mom. So, why are you investing? Answering this question for yourself helps you choose the right investment for yourself, and it also helps you align your investments with your goals. For instance, if you want to save for an emergency fund, you can open a money market fund account, fund it, and reach your goal. If your goal is like to have $2,000 in your emergency fund, after you reach that goal, you can focus on doing another investment. But first, make sure you sort out your emergency goal, even if it's $500 or $300. This helps you sleep better at night. The best part is that the money will still earn some interest as opposed to just putting it in a normal bank account. If you're looking for passive income, wealth building, long term goals, like maybe your children's school fees, you can decide to go with Treasury bonds, because these provide passive income every year. You get paid twice. So if you buy 6 bonds, all of them spaced out properly, you can get a payment every month. So if you're looking for passive income, if you're looking to go slow on your job, but you still want to get some money coming in, you can look into bonds. Just make sure you space them out properly. Like I said, if you don't have money to invest in a bond, guys, just put the money in a money market fund. When it gets to 50K, 100K, go buy your first bond. What I would suggest is, guys, you can have both, because as you can see, both of them serve different purposes. And if you're looking into having an emergency fund, that is money you can literally withdraw anytime. So you are not really investing when you have an emergency fund. And also, an emergency fund, when you have an emergency fund in your money market fund and you have a bond, it will prevent you from selling your long term asset. Your long term asset is like a bond. So if you have a money market fund for an emergency fund, you'll use the money in your emergency fund and not liquidate your bonds. So your long term assets are protected. That's why, guys, you need both. We are not choosing. We are investors and we are trying to diversify our portfolios. Fill in your money market fund. After that, now start stacking your long term assets. And these include bonds, these include shares, these include ETFs, and all that. Always remember, when you are looking into an investment, ask yourself, what goal is it serving? Do I want to retire early? Do I want to quit my job and raise my kids? Do I want to travel and still have money coming in? So whenever you make an investment, just know the goal it's serving. If you're serious about building your financial future, don't just save in a bank. Understand your options, understand money market funds, treasury bonds, stocks, ETFs, and start with one or two as you build up to have a diversified portfolio. I offer one on one strategy calls where we tackle each asset class and figure out how to get you started on investing in them according to your lifestyle and financial goals. Use the link in my description box and let's get the confusion out of your money. Don't forget to subscribe, comment, share, hit the notification button, and I'll see you next time.